Hello and welcome back for another Sandbox price prediction update, and in this video I'll be diving deep into the technical analysis and also give you my next price targets here on the Sandbox chart. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel and also check out the channel membership. And at the time of this recording, we are holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue gearing up. We are also holding above a key area of support at around the $0.5613 mark. And after seeing our lows on the 23rd of May, you can see that we have seen a massive pump to the upper side. And this pump has been a breakout out of a chart pattern that we had been trading within, which is a double bottom, where you can see that we have a common bottom at around the $0.4828 mark, the area highlighted on the chart using this yellow support area, where I can have this as the first bottom, then the neckline, then the second bottom, and then we saw a massive breakout to the upper side. And this is a chart pattern that breaks to the upper side, having the minimum target area for the breakout being given by the height between the neckline and the bottoms, and we can get that height and then place it above the neckline, giving me a minimum target area at around the $0.649 mark, which is an area that we have fully maximized in a move that has now given us a high at around the $0.6154 mark. Sandbox has also continued to obey the Elliot structures, and zooming out on the charts to give you my analysis basing it on the Elliot structures, you can see that after seeing our December lows, we saw that massive pump giving us a high at around the $0.9444 mark in what I've been terming as the formation of that first wave to the upside. Then we started a corrective structure in the formation of these larger Elliott wave count 2 in a breakdown move that has also been playing out in an ABC corrective structure, where I'm terming these as the wave A, then a wave B, and we saw one more leg down in the formation of that wave C. And having seen that ABC corrective structure complete the formation of that wave 2, whatever we expect next basing it on the Elliott wave structures is the start of an impulsive wave to the upside in the formation of these larger Elliott wave count 3 to the upper side. And I believe that is what is playing out here on the Sandbox chart. And because of the impulsive nature in the formation of that wave 3, I'm tracking a 5 wave structure over here to give us that impulse to the upside in the formation of that wave 5. And to also, that is the formation of that wave 3, and to also complete the formation of that wave 3 to the upside. And I believe we are also seeing such a scenario over here, where you can see that after seeing our lows on the 23rd of May, we saw that start of an impulsive move to the upside in what we can term as a first wave to the upside. So we can term these as the wave 1. Then we saw a corrective structure in the formation of that wave 2. And whatever we are seeing at the moment is an impulse in the formation of that wave 3 before we can expect a wave 4 and then a wave 5 to the upper side. And once we complete that 5 wave structure to the upside, then that will be confirming that the low for these, that is the low that you made on the 23rd of May, was the low for this wave C and the low for that higher Elliott wave count 2, and that we are now ready for a massive pump in the formation of that wave 3. And giving you minimum target areas for this wave 3 to the upper side by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That now gives me a minimum target area at the fib level 1.618, and that is at around the $0.6814 mark. And that is the minimum that we can expect that wave 3 to the upside to do. And in case we see a bit of a retracement over here on the charts, then we can expect our key area of support at around the $0.5633 mark to give us support. And once we find support on that area, then we can expect a massive bounce to the upside to fully maximize our minimum target areas in the formation of that wave 3 at around the $0.6838 mark. And that is what I'm expecting here on the Sandbox chart. And in case further breakdown continues, we lose that key area of support and continue seeing lower prices, and maybe at some point we hit invalidation points for these 5-wave move to the upside, then we can term whatever we have over here as just a fake breakout to the upper side. But I hope that Sandbox is going to maintain that impulsive move to the upside and also continue holding above significant areas of support, and also fully maximize our minimum target area in the formation of this wave 3. And that is what I'm expecting here on the Sandbox chart. Also taking a look at the indicators on the RSI, we are trading at around the 58 mark. Also taking a look at the MACD, we have been able to print a bullish cross, fully supporting higher prices. So let's be patient and see how that plays out, and I'll be keeping you updated.